Welcome to my channel. I am the Trader Investor. This is a short video to help you navigate the PDT challenges for small account sizes. This is only for educational purposes. I'm just here to give you information. I'm not here to provide any buy or sell recommendations. I'm not a licensed broker. I'm not a licensed financial advisor. This is just for educational purposes only. And don't forget to subscribe, hit the notification bell, and click that like button so that I can update you when my next release comes up. So what is PDT? PDT is pattern day trading. And pattern day trading means opening and closing a position in the same day. So the FINRA, the Financial Industry Regulatory Authority, states that pattern day trading means that an investor has 4 day trades in a 5-day period. In a 5 consecutive days, if you do 4 day trades, you're considered a pattern day trader. What this means to you is you can make up to 3 day trades within those 5 days without being considered a pattern day trader. So keep this in mind. In a 5-day period, you can make 3 trades without being considered a pattern day trader. Of course, this implies you have a small account. You have an account that is less than $25,000, 25,000 US dollars. If that's your account size, you are limited to 3 day trades in a 5-day period. So keep that in mind. And we'll go into the various explanations as to what that means and how you can go around it, right? The purpose of this video is to show you how you can get around from being tagged as a pattern day trader. So that's really the purpose of this video. So what are some of the workarounds? What can you do? Right, just at a high level, let's just talk about a few things. One, you can do fewer trades. Make sure you don't pass those 3 within the 5-day period. You can have a cash account with level 2 options options account, right? So with level 2 permissions on your account. What that means is when you place a trade, as long as you're not over your account size, there's no limit to how many trades you can place. So if you have, let's say, a $1,000 account and you place 4 trades in that same day that are each $250, you're not considered a pattern day trader because you are not borrowing money. That is, you're using your own funds. The limit with that and the downside is if you get an opportunity for a 5th position, you no longer have the funds to do it. You have to wait until the next day. The good thing is if you do this with options, that's why we're recommending level 2 options. If you're doing it with options, the settlement is the very next day, as opposed to stocks where the settlement is in 3 days. But you get in and out today, tomorrow morning, those funds are available for you again to do another 4 trades of $250 or another 4 trades, 5 trades of $200, or you can do 10 trades of $100 depending on the positions that you're selecting, as long as you're not going over your account size for that day. So that's really how using a cash account will benefit you. You can also use multiple accounts. So you can day trade in one account up to your 3, and then have another account to do another 3, another account to do another 3. Then you're getting around PDT rules as well. With that, you don't have to have a cash account, so you can even do more option levels, so not just up to level 2. You can do level 3, level 4. Then there's the 4th option, which is buying options spreads. But this is with a special strategy. I'm just going to tell you very quickly how I structure this if I were to do it in a small account using option spreads. A spread is buying a long and selling a short, for the same underlying, right? The long and short have different strike prices, and they're usually in the same expiration period, but it could be a calendar or diagonal, which means that they have different expiration periods. But the idea is You buy long and you sell short, creating a spread. But here's where the twist comes in to get around the PDT rules. You buy the long first, and as soon as price moves in your favor, and you can recover your original price with a little bit of profit at the next strike price, you sell that next strike price. What that means is you have removed capital and you're letting the rest of the trade work for you now to give you that maximum potential for that spread amount. So if it's a $5 spread option, then you have $500 you could potentially gain if this trade works out. But keep in mind, you cannot close this position until the very next day. If you close this position the same day, both your long and short will count as one each, meaning now you've done two trades as a day trader, and the next day you can only do one for the next 5 days. So keep that in mind. But the point is, you enter long, you wait for price to move in your favor. Instead of taking profits from your long, you sell the short position, you lock in maybe a little bit of profit, and you have this spread as your potential gain area, and you wait until the next day to close it. Fifth, you have no PDT rules if you're trading futures. If you're trading index futures, if you're trading commodities, there is no PDT rule. And your margin is just dependent on your brokerage account. Some brokerage have a day trade margin and some have just only the overnight margin. So it depends on your broker. So the sixth one, which is kind of obvious that I'm not mentioning here, is actually having an account size larger than $25,000. But as soon as your account size dips below it, you will still be under this regulations, under this guideline. So keep that in mind. As soon as you have over 25K, you can day trade in and out, no limits. But just keep watch of your bottom line just to make sure that you're not tagged as pattern day trader if account drops below that 25,000. So what are the next steps for you? If you want to day trade, you have a small account size, is decide what account you want to dedicate to trade with, and if do you want to spread it across multiple accounts or just have one account, and then do you want to do a cash account which gives you a little bit more flexibility, so make that determination, and then decide what instruments you want to trade. Do you want to trade options, stocks, futures, forex, because they all have different PDT rules and requirements, and forex is the same like futures, it just settles right away, so there is no pattern day trading rules for forex as well. And your final step is to start making some greens. So just have a plan and execute to that plan. With that, I want to remind you again to please subscribe, hit that notification button. It helps me out. Thank you for your time.